Hello everyone, and welcome to my channel. In this video, we're going to talk about the S&P 500, a time-tested path to prosperous investing. The S&P 500 is one of the most widely followed and respected stock market indexes in the world. It represents the performance of 500 large-cap U.S. companies that span across various sectors and industries. It is often considered as a proxy for the U.S. economy and the global stock market. Investing in the S&P 500 can be a simple and effective way to achieve long-term financial goals and build wealth over time. But what exactly is the S&P 500, and how does it work? And how can you invest in the S&P 500, and what are the benefits and drawbacks of doing so? That's what we're going to find out in this video. In this video, we're going to cover four main topics: the history and composition of the S&P 500, the performance and characteristics of the S&P 500, the methods and options of investing in the S&P 500, and the tips and best practices of investing in the S&P 500. By the end of this video, you will have a better understanding of how the S&P 500 works, and how you can use it to grow your wealth faster over time. Let's start with the history and composition of the S&P 500. The S&P 500 was created in 1957 by Standard & Poor's, a financial services company that provides credit ratings, research, and analysis. The S&P 500 was designed to be a broad and representative measure of the U.S. stock market, covering about 80% of its total value. The S&P 500 replaced an earlier index that tracked only 90 stocks, which was not enough to capture the diversity and dynamism of the U.S. economy. The S&P 500 consists of 500 large-cap U.S. companies that are selected by a committee of experts based on several criteria, such as market capitalization, liquidity, profitability, growth potential, and industry representation. The S&P 500 is a market cap-weighted index, which means that each company's weight in the index is proportional to its market value. The larger the company, the more influence it has on the index's performance. The S&P 500 is also a float-adjusted index, which means that only the shares that are available for public trading are counted in the index's calculation. The shares that are held by insiders, such as founders, executives, or governments, are excluded from the index's calculation. The S&P 500 is divided into 11 sectors that reflect the major segments of the U.S. economy. These sectors are communication services, consumer discretionary, consumer staples, energy, financials, healthcare, industrials, information technology, materials, real estate, and utilities. Each sector has a different weight in the index based on its market value and relevance. The sectors also have different characteristics and performance based on their growth prospects, risk profiles, and dividend yields. The S&P 500 is updated regularly to reflect changes in the U.S. stock market and economy. The committee that oversees the index reviews its composition every quarter and makes adjustments as needed. The adjustments can include adding or removing companies from the index due to mergers, acquisitions, bankruptcies, or spin-offs. The adjustments can also include changing the weights of companies or sectors in the index due to changes in their market value or importance. The S&P 500 is one of the most widely followed and respected stock market indexes in the world. It represents the performance of 500 large-cap U.S. companies that span across various sectors and industries. It is often considered as a proxy for the U.S. economy and the global stock market. Investing in the S&P 500 can be a simple and effective way to achieve long-term financial goals and build wealth over time. The next topic that we're going to talk about is the performance and characteristics of the S&P 500. The performance of the S&P 500 is measured by its price level, total return, and annualized return. The price level is the value of the index at any given point in time, expressed in US dollars. The total return is the change in value of the index over a period of time, including dividends reinvested. The annualized return is the average rate of return per year over a period of time, assuming compound interest. According to data from Yahoo Finance, as of December 31, 2020, the price level, total return, and annualized return of the S&P 500 were as follows. Price level, 3,756.07. Total return, 18.4% for 2020, 267.35% for the past 10 years, and 1,090.74% for the past 30 years. Annualized return, 13.88% for the past 10 years, and 9.88% for the past 30 years. As you can see from these numbers, the S&P 500 has delivered impressive and consistent returns over time, beating inflation, bonds, and most other investments. The S&P 500 has also outperformed most other stock market indexes around the world, such as the Dow Jones Industrial Average, the Nasdaq Composite, the FTSE 100, or the Nikkei 225. The characteristics of the S&P 500 are determined by its volatility, diversification, and correlation. The volatility is the degree of variation in the index's returns over time, measured by its standard deviation or beta. The diversification is the degree of difference among the index's components in terms of their sectors, industries, or regions. The correlation is the degree of similarity between the index's returns and those of other assets or markets, measured by its coefficient or R-squared. According to data from Portfolio Visualizer, as of December 31, 2020, the volatility, diversification, and correlation of the S&P 500 were as follows. Volatility, the standard deviation of the S&P 500 was 18.47% for 2020, and 14.82% for the past 10 years. The beta of the S&P 500 was 1.00 by definition, as it is the benchmark for the U.S. stock market. Diversification, the S&P 500 had a high degree of diversification, as it covered about 80% of the U.S. stock market value and represented various sectors and industries. The sector weights of the S&P 500 as of December 31, 2020, were as follows. Information technology, 27.61%. Healthcare, 13.45%. Consumer discretionary, 12.23%. Communication services, 10.91%. Financials, 10.2%. Industrials, 8.57%. Consumer staples, 6.7%. Utilities, 3.08%. Real estate, 2.51%. Materials, 2.48%. Energy, 2.27%. Correlation, the S&P 500 had a moderate to high degree of correlation with other assets or markets, depending on their nature and location. The correlation coefficients of the S&P 500 with some other assets or markets as of December 31, 2020, were as follows. U.S. Aggregate Bond Index, minus 0.03. U.S. Corporate Bond Index, minus 0.01. U.S. Treasury Bond Index, minus 0.05. Gold, minus 0.14. Dow Jones Industrial Average, 0.99. Nasdaq Composite, 0.95. FTSE 100, 0.76. Nikkei 225, 0.71. As you can see from these numbers, the S&P 500 has a moderate level of volatility, a high level of diversification, and a moderate to high level of correlation with other assets or markets. These characteristics can affect the risk and return profile of your portfolio, depending on your investment objectives and preferences. The performance and characteristics of the S&P 500 are measured by its price level, total return, and annualized return, and determined by its volatility, diversification, and correlation. The S&P 500 has delivered impressive and consistent returns over time, beating inflation, bonds, and most other investments. The S&P 500 has also a moderate level of volatility, a high level of diversification, and a moderate to high level of correlation with other assets or markets. The next topic that we're going to talk about is the methods and options of investing in the S&P 500. There are several ways that you can invest in the S&P 500, depending on your preferences and resources. Some of the most common and popular methods and options are Index funds. Index funds are mutual funds that track the performance of a specific index, such as the S&P 500. Index funds aim to replicate the index's returns by holding all or most of its components in proportion to their weights in the index. Index funds are passive investments, which means that they do not try to beat the index or market by actively selecting or trading stocks. Index funds are also low-cost investments, which means that they charge low fees or expenses for managing your money. Exchange-traded funds. Exchange-traded funds, or ETFs, are funds that trade on stock exchanges like stocks. ETFs also track the performance of a specific index, such as the S&P 500, by holding all or most of its components in proportion to their weights in the index. ETFs are also passive investments, which means that they do not try to beat the index or market by actively selecting or trading stocks. ETFs are also low-cost investments, which means that they charge low fees or expenses for managing your money. However, unlike index funds, ETFs also have some additional costs, such as brokerage commissions, bid-ask spreads, and premium or discount. Index options. Index options are contracts that give you the right, but not the obligation, to buy or sell a specific index, such as the S&P 500, at a predetermined price and time. Index options are derivatives, which means that they derive their value from the underlying index. Index options are also leveraged investments, which means that they allow you to control a large amount of money with a small amount of money. Index options are also flexible investments, which means that they allow you to profit from different market scenarios, such as rising, falling, or sideways markets. Index futures. Index futures are contracts that obligate you to buy or sell a specific index, such as the S&P 500, at a predetermined price and time in the future. Index futures are also derivatives, which means that they derive their value from the underlying index. Index futures are also leveraged investments, which means that they allow you to control a large amount of money with a small amount of money. Index futures are also standardized investments, which means that they have fixed terms and conditions that are regulated by an exchange. These are some of the most common and popular methods and options of investing in the S&P 500. Each method and option has its own advantages and disadvantages, and requires different levels of knowledge, skill, and risk tolerance. You need to choose the best method and option for you based on your preferences and resources. The last topic that we're going to talk about is the tips and best practices of investing in the S&P 500. There are several tips and best practices that can help you invest in the S&P 500 more effectively and efficiently. Some of the most important and useful tips and best practices are: diversify your portfolio beyond the S&P 500. The S&P 500 is a well-diversified index that covers various sectors and industries of the U.S. economy. However, it is not enough to diversify your portfolio across different types of assets, such as bonds, commodities, real estate, or international stocks. Diversifying your portfolio beyond the S&P 500 can reduce your risk by lowering the impact of any single asset on your portfolio. It can also increase your return by capturing the opportunities and growth potential of other assets or markets. Dollar cost average your investments in the S&P 500. Dollar cost averaging is a strategy that involves investing a fixed amount of money in a specific investment at regular intervals, regardless of its price level. Dollar cost averaging can help you invest in the S&P 500 more easily and consistently by eliminating the need to time the market or predict its movements. It can also help you reduce your average cost per share by buying more shares when prices are low and fewer shares when prices are high. Rebalance your portfolio periodically according to your target allocation. Rebalancing is a strategy that involves adjusting your portfolio allocation to match your desired or optimal allocation based on your goals, risk tolerance, and time horizon. Rebalancing can help you invest in the S&P 500 more effectively and efficiently by maintaining your desired level of risk and return. It can also help you capture profits by selling high and buying low. These are some tips and best practices for investing in the S&P 500. Investing in the S&P 500 can be a simple and effective way to achieve long-term financial goals and build wealth over time. I hope you found this video helpful and informative. If you did, please give it a thumbs up and subscribe to my channel for more videos on investing in the S&P 500. Also, please leave a comment below and share your feedback or questions on investing in the S&P 500. What are your reasons and goals for investing in the S&P 500? What are your methods and options for investing in the S&P 500? How do you optimize your performance and characteristics when investing in the S&P 500? I would love to hear from you. Thank you for watching, and I'll see you in the next video.